Dear investors, welcome to the December and January 2026 monthly roundup video. January has been nothing short of chaos with the US capturing Venezuela president and Mr. Trump claiming stake on Greenland, partying NATO allies saying that they were not on the front in the Afghanistan war, receiving the Nobel Prize of the Venezuelan opposition leader Maria Machado. Well, Mr. Trump believes that he stopped 8 wars in the year 2025, including the India Pakistan conflict, and repeatedly threatens nations with new tariffs, including India, Canada, and the whole of European Union. All the news indicates as if the world is going for a toss. As of 25th January 2026, 24 karat gold has hit 16,000 per gram in India from 8,000 per gram almost a year ago. That's 100% jump in the price of gold. And sure enough, everybody is talking about what to do, how to buy gold ETFs, silver ETFs, and so on. The last of such moves happened in gold in the year 1979 during the Iranian Revolution, followed by the Iraq Iran War. So, why are gold prices rising such rapidly? My guess is central banks buying gold to hedge their risks against a depreciating dollar started this rally in gold, but now it's retail investors and traders driving the gold price. Clearly, an ugly turn of events, and it almost looks like gold and silver, although commodities, have entered a bubble scenario. Just like investors were interested in and putting huge chunks of their savings into small cap funds 2 years back and are now sitting on an absolute 10 to 15% loss in the portfolio. Many such investors would get stuck in gold for years altogether with meager returns. Fun fact is, anytime gold has given 12% or more return is when the prices of gold were stagnating or low for a few years. At this price point, gold is neither cheap nor stagnant. So, my guess is, as has happened with gold historically, the average return would be in the range of 8 to 9 10% over many years to come after this bull rally subsides. Anyway, should not discuss so much about gold or silver. Wanna know why? I'm yet to hear of a retail investor who has invested 50% of his or her portfolio in gold or silver. All I hear is gold has risen 100%. I had invested 1 lakh in it and now a year later it's 2 lakhs. Funnily, the same investor would have a mutual fund portfolio of 20 lakhs or more. So if someone is investing 5 to 10% of their portfolio in gold or silver and making a 100% return, well, if you do the math, it adds 10% to your overall portfolio in 1 year. What's the big deal about it? I'm not for once suggesting that you put 50% of your portfolio in gold or silver or any other commodity. That's outright madness and amounts to trading and not investing. Because commodities by nature are very volatile and non productive asset. Their price is largely determined by the demand and supply scenario. The important question to ask yourself is, can gold or silver sustain this rally of 100% year after year? And would you be comfortable putting 20, 30, or 50% of your hard earned savings into this kind of commodity year after year and expect that they would give you this kind of higher returns? If the answer is no, then any news of gold doing this, silver doing that, it has risen this much, it has fallen this much, is immaterial, as it would not add any meaningful returns to your portfolio or your overall financial well being. In the meanwhile, the Indian economy is doing much better with December 2025 inflation still low at 1.33%. Nifty 100 companies' earnings have grown at 9% for the full year 2025 despite external shocks, tariffs, and war situations. The manufacturing and services index that track business confidence and economic activity have been consistently in an expansion phase for the past 1 year. Let's analyze what has happened in the Indian share market over the past few months till January 27th, 2026. Nifty 100 index gave minus 4% return. Nifty 500 index gave minus 5% return. Nifty Mid Cap 150 index gave minus 6% return, and Nifty Small Cap 250 index gave minus 8% return approximately. That doesn't look any bit concerning to me. Definitely not like the world is going to end. Markets are and will be volatile over the short term. Even the Nifty 100 and Nifty Midcap Index recently made new highs before falling back. As a long term investor, all this market is doing is providing me with a very good opportunity to invest in a lump sum and continue or increase my SIP if I have the funds. People tend to have this strong recency bias that when something is in flavor in the news or social media, they latch on and start allocating their hard earned money to it as if they are riding a wave and they would be making bumper profit out of it. What's in flavor mostly doesn't work in your favor. Investing, my dear friends, is a slow and boring business. Keep it slow and boring, and you will have a better chance of making big in terms of portfolio returns in the long term. Look at the news and try to spice up your investing journey. You are inviting big trouble. Whenever the market is down, some people panic and start analyzing their portfolio. Oh, I should allocate less to small caps. Oh, I should buy more of the large caps. Maybe I should buy some gold, maybe some silver. Maybe I should redeem my funds and put them in FDs. Maybe I should stop the SIPs. Maybe I should reduce my SIPs. Maybe I should pay off the loans, etc. This, in my humble opinion, is not a sensible approach and is definitely not portfolio adjustment. As the saying goes, don't jump the boat when the water is choppy. In the boat, you have a high chance of survival. Out in the sea, you have very little. The market has stagnated for 14 months now. Think of this phase as just that, a phase that will pass, and your horizon is long term. So all that loss that you're seeing in your portfolio is just paper loss. Suppose your own house that you live in gets quoted daily on TV and one day you find out that your property value has crashed 30%. Do you feel sad and curse yourself for buying that property? Do you curse the dealer who gave you that deal and go to the market and sell that property at that price? You won't do any such thing. Rather, you won't be bothered at all thinking that this is your house where you're going to stay for a long, long time. So it doesn't matter what price it is quoted now or even 5 years from now. The same goes with investing. Although the prices of your mutual funds are quoted on a daily basis, these are your long term assets, a part and parcel of your long term financial journey. So don't bother if it is down a few percentage points today, as your investment horizon is very long. If you are someone who has invested in this market thinking that I'll invest for 1 or 2 years and whatever returns I'll get, I will take out of the market and use it for something else, bad idea. Or if someone has told you with certainty that you can make 15%, 20% kind of return in a year and you have invested with that thought process in mind, please be aware that there is no certainty or guarantee of return in the share market. Mutual funds invest in stocks that are trading in the share market. The stocks are companies that have relevant business model and are operating in the real world. They are always affected by whatever is happening in the economy, in the politics, in the oil prices, in the dollar rates, and so on and so forth. Then again, count the number of people who are investing on a daily basis, who are trading on a daily basis, even so, such a huge ecosystem is bound to be volatile. Please hire a good financial advisor to help you stay focused on your long term goals and always invest for the long term, at least 5 years. Whenever markets are down, stop looking at your portfolio altogether. Let the financial advisor do his or her job and you please enjoy other delicacies of life to keep your mind away from the markets. Look at your investment portfolio and returns every 5 years, and you'll be much happier and peaceful. Of course, if you're a DIY investor, then you have to look at your portfolio more frequently. But please do watch my videos. They may provide you a sense of calmness and clarity in an otherwise vicious and noisy world. Hope this video has been useful. Thank you. Happy investing.